Welcome to Subramani. The markets have crashed over the last couple of days and maybe partially recovered too. And maybe the market fell 900 points on the on the Sensex. And is it too much? I'm not getting into that at all. I'm saying what happens is, in many assets, you know the price of the asset at which you will sell only when you actually go to sell it. Now this may sound very odd, because if you are trying to sell the index, you will have the index quoted to you every minute, so every second, so anytime you will be able to sell. However, that is not true for all assets. Now when the regulator says go and do a stress test, and the regulator means everybody has to do the stress test at more or less the same time, it is fairly obvious the answer that you get is going to be very wrong. It is going to show a lot of volume, because there will be only sellers, and so you will have a large volume shown, but the price won't be right. So if I were a fund manager, I would not do a stress test exactly when the regulator asks me to do. What should the regulator instead be doing? In saying that there has to be a stress test done on assets of the small cap, mid cap, large cap fund, doesn't really matter, and that trustees should be entrusted with the job of doing that stress test, not AMFI, right? AMFI does not, AMFI is a toothless body. So if the trustees were to do the stress test, each trustee would choose a different date and different asset, and then you would know whether the stress test has been worthwhile. So does it happen that sometimes some assets you have no clue at what price to sell, and only after it is sold you get to know the price? Yes, it happens. The greatest example that people can give you is the Vanderbilt house that got constructed. I don't remember the exact dates, but I think they constructed it for $11 million, and during depression they sold it at $100,000, which is talking of almost 100% haircut, right? Just get rid of the house so that I don't have to do the maintenance kind of a price. Pounds, 11 million pounds to 100,000 pounds. It could have been dollars or pounds, doesn't really matter. 99% haircut. Has it happened to me? Yes, it has happened to me. Talking of 1992, I had shares of Mazda Industries. It used to be called Mazda Leasing, then it was Mazda Industries, and that company was quoting at, I think, 1200. When my man went into the ring to sell it, he came back saying, look, the prices have crashed, it is only 900. I said, just get rid of it. So I sold Mazda Industries at 900, 800, 700, 600, I think even 500, right? Within half an hour of doing the transaction of 900, I also sold it at 400. Remember, 1992, Sebi was not yet born, there were no limits, nothing. You could have a free fall, and there was this free fall. I have no great regrets. I bought the share at 9 rupees. So yes, the regret is I could have sold some at 1600. I did sell something at 1200 or 1300. Then all the others I sold, but I think the worst price that I got must have been 500. So no great regrets. And believe it or not, I was waiting to sell it after some time, saying, okay, I will sell it off and buy a house, because then it will be long-term capital gain. Well, long-term capital gain didn't happen. It was short-term capital gain. Maybe I paid taxes on that. I don't remember that now. So it does happen. So in small cap, mid cap, and some shares which are stuck for liquidity, where you have only sellers and there's no buyers, you could have such a situation where you know the price of a share only after you have sold it. It's not going to be very easy. Similarly, in real estate also this happens. Similarly, in LTCM, suddenly at a price there is just no taker, right? So I remember one fund house which went through a problem with their debt paper, could not get rid of Tata Power debentures or Tata Power bonds at 9.5% interest yield. They could not get rid of it. I mean, it took them time to get rid of it. This is not something small. Guaranteed return 9.5%. But they found it difficult selling it off at that price, because suddenly liquidity vanishes in certain stocks. So while doing your experiments in life, and while doing your learning, it's very difficult to let the people suffer because of these kind of learning and experiment. So should you do a stress test? Yes, you should do a stress test. Should all fund houses be asked to do a stress test at the same time? Maybe yes, maybe no, but couldn't it have been handled better? Maybe could have been handled better, but I'm just saying that whenever there is something like this and the market panics, best thing for you to do is sit tight. Maybe not buy more, maybe not sell, but at least sit tight, don't do anything, and that's the best thing that I could have done. And I actually went and bought some more. I sold some, I bought some, so I did that kind of a thing. But my advice would be sit tight, don't do anything. Some falls in the market are triggered by people, investors, some are triggered by regulators. Not that I'm trying to blame the regulator, but by the way, there are a lot of work which I can give the regulator which has to be done, which are far more important than a stress test. One is monitoring the influencers' impact on the market. They're jacking up share prices, they're making prices crash. All those things are happening. I think the Sebi has a lot of work to do in that area. How they would go about doing it, I have no clue, but I think that is far more important than doing stress test. Thank you.